All right, here's my market recap and trade reviews for March 24th. And starting with our higher time frame view, we have, you can see we opened, see lower in range. So for that, we have all kind of similar to what we were looking at yesterday. This is basically a mean reversion day. You can see that that point of control never shifted. So we just were watching a ping pong match here. A lot of good potential setups. I got one of them. I had three scales, then one winner that I'll go through here. Um, and we see this scenario. It looks similar to that, but we went back up higher. See where we tested on here. See, we never even got to the point of control. We never even got to this naked VPOC here at 75. Well, looks like VPOC did shift up towards see when was, oh, oops, my bad. It's missing some data right here. Okay, there we go. So I guess that makes sense. You know, look at these 2 days. It just you know, you went down, kind of came up, took out a bunch of shorts, went short again, and today's a little less decisive, a lot of back and forth, but came back, tested these shorts. And you can see that this point of control, it didn't, it was just flatlined basically all the way from, was it 7:15 or so, just kind of flatlined. But it would make sense on a Friday, wouldn't it? Because you had two of these days where it really intense shorts. There's the FOMC madness. I kept the hell away from that. Yesterday was also kind of hard for me to read, and there was a lot of stuff going on pretty quickly, so I kept the hell out of that. Then today I was able to get a little bit better of a read, and see if I can find one of these. That's lower out of range. We're lower in range. You see, we opened within yesterday's range here. Okay, well, we're looking at something a little bit more like that. I guess you could say, you know, it's it's somewhat like that, you know. So when the market opens lower in range, either the prior trading day's high or low is broken 75% of the time, and the previous low is favored by 11%. Either the overnight high or low is broken 93% of the time, and the overnight low is favored by 22%. Let's see what we're looking at here. Okay, that looks like I see under there ETH low. Okay, just a second here while I okay, yeah, well they're overlapped, but that's ETH low. Did it get to it? What does this bar say? Low 37.50. So it just barely did not make it. It was like 2 ticks off. So it was just barely just a hair off. And then we had this here. This is a little nutty. And I think I took some scales right in here, which is fine. A scratch is a win. You protect your account. You got risk neutral. You scaled. Didn't quite have enough to, we're just horseshoes and hand grenades, as they say. So I think it was right down here. I got a piece of this long move. And I think I remember right, I think I got out somewhere around here. There's our volume point of control 5750, which it never came back to. And look at that, see how it was just flatlining the whole day. So there's not as much volume at all up here. This is just kind of flatline 5750. So it never came back and tested it again. So, maybe Sunday, Monday. This could be one of the places it tries to test back to. You've got the previous week's high. You've got 4020, that's another one. What else do we have further up? Wish this thing would stay on automatic scaling. What do we have further up? See that naked VPOC, that was taken out. This one was taken out this morning at 75. So 75, 5750, 4009, 4020. So, I don't know if that's going to be a valid 130 again. You can kind of see it here between 20 and 30. Okay, enough of that. Let's go over the economic calendar again. So today there were some pretty big events. Core durable goods orders. We had one of the talking feds. We have PMI, manufacturer. We have these different PMIs. We've got a few talking feds. We have these oil rig counts. We have crude oil, gold, NASDAQ. What was the big event here? The 3-star. Yeah, core durable goods. And then PMI, that wasn't as big of a deal. It's just a monthly, it looks like. So not a huge deal. When you have the talking feds come on, especially after these events going on with the banks, that's a big deal because this kind of stuff hasn't happened since the Great Recession. I still remember how bad that was. Lehman Brothers with their subprime mortgages and just bailing those banks out. I mean, it was a disaster for years after that, just horrible. So we have a big deal going on with these banks. Uh, they're trying to convince people that things are okay. That might kind of suggest, like, hey, if things were okay, you wouldn't have to, put out messages like that, trying to calm people down. So we're not seeing everything going on under the hood, but it's a different discussion than what I'm trying to do on here. So anyway, zoom down to the open. So I didn't do much at the open. I yeah, I didn't do much at the open. See, I was beginning to be able to see from here. I've got the point of control shifting up. These yellow lines, for some reason, these notes didn't fill in properly, so I have this initial balance high, this initial balance low. So basically what I was seeing was, this is favoring making a move long. And then on the higher time frame, it was looking like it was more favorable to go long. We have stuff up here to test. We already took that out. I mean that this was another one from earlier. That was another target, 75. So yeah, let's go back down here. Okay, now at this point the V pocket shifted up. It hadn't moved. Now look at this VPOC. The thing barely moved, so I was like, okay, mean reversion, but still kind of favoring the upside. Look at this one here. Look who's really in control. Look at those clean moves. Buyers. Buyers are the aggressors. Buyers are the aggressors. Retail stops down here, but there was this liquidity, and that's a mistake I made with these trades. And then the good trade I made, oh, I'll go to that in a minute. So let's zoom down into here. Let's have us a look at this. Okay, now we're getting under the microscope here. Okay, so this came down. We know there's typically retail stops around here, VPOC, mid, VWAP, and this had gone past all three of them, and we had a liquidity fill right here. The lesser one, not the larger one. So I entered, and then we see a big liquidity fill at 347. We have that buy absorption. We have an iceberg going off. Not that huge of an iceberg, but there we go. So that's a decent sized buy iceberg going off. And here test again, filled up some of these orders. See the colors turning lighter. Looks like they pulled a little bit here, or it got filled. and went in here, more fills, and see, I got scaled up here. So there's 56, there's 59.25, and then I just let it sit too long. You know, there's some more fills that had to happen down to here, and so I went long, scaled, scratch, which is fine. I sure as hell would rather take a scratch than a loss. And so after all this liquidity filled, I figured, okay, now look at this. See, it's supporting here. We have this stop divergence. That iceberg went off, so it looks like it finished around here with this liquidity fill. And so I figured, okay, we're getting stop divergence. Now it's time to get on the long side again. And so again, I scaled. I probably should have taken profit up here, but I was looking up towards around 70 based on that higher time frame. And see, this is where the initial balance high is. So I figured, okay, maybe it can't quite make it to 75, but I figured it could make it up to here. And so that was long, scale, and taken out again. But, you know, based on what I was looking at, I was still figuring, you know, we have a chance for, you know, to get long. And then look here again, I'm seeing support right on this volume point of control. I see it right here. Comes test back down, then I'm in. You know, then it comes down, I'm thinking, oh no. Look at that, it's down 2.25 points, 3 more ticks, I'm out. But then it stabilizes here, it scales. You know, since it did scale, I figured, okay, I'm steering in the right direction here, so I figure 70, you know, based on the higher fractal time frames and all that, you know, it seemed like 70 was not an unrealistic target. So I scaled here, and then I was taken out here. See, I moved it up just a tiny bit on each one of these. See, the 0.5, 0.75. That's just so I get a tick to cover the commissions and fees. Now then we come up here, there's an excellent long move down. And here was this liquidity from before. So that's a high level of liquidity. That's a high level of liquidity right here, around 45. And let's look at this fill. So see, these are getting filled. And we have these buy absorptions. And then you look at it, it's all been absorbed at this point. So these orders are getting filled here. We're getting filled here. So again, I was still favoring that long side. So after this liquidity fill, this is where I get long. And I scale right here. And you know, my target is still, you know, I put my target here. That seemed reasonable. You know, that you have your retail stops over near the mid and the VWAP. Then, you know, I'm just looking at this structure here, this testing this. And, you know, at the time it appeared to be losing strength, which it didn't. It was just, the party was just getting started. So I left quite a bit on the table. So this was more psychological, you know, it was not, is because of those previous scratches. You know, I was just barely positive, like $30 on those scratches. So I protected myself. We went through them. There were 3 of them. I protected myself. So that's a good thing. That's a win when I protect myself. You know, but then at this point I'm starting to get a little fatigue and you know, the psychological things kicking in. Because see, I know I end right here where my cursor is, and you know, at the end of the day, oops, it's not on there anymore. So that's what it looked like for today. So that's if I'm in a trade and I'm right here, you know, and it's starting to get a little fuzzy after this move, but I mean not really because of this liquidity fill. Like we're going to look at this in a minute. This is a good fill right here. You know, I took that, and hey, that is not a bad day at all. If you make $500 after 3 scratches, I would be thrilled if I made this like on a regular basis. I could make 2 or 3 of these a week, trades like this. So let's go down here, see. Yeah, see these ones, I kind of, you see scratch, scratch, scratch that one, scratch that one, scratch that one, with just enough to stay positive there, pay for the fees. And, you know, then here's that scale, 137.50, here's 350. See, I'm in that a little bit longer than what I'm typically used to. I mean, I've been in trades where I'm in for 2 or 3 hours, and that's just nail biting. Like you want to get the Pepto-Bismol in a bucket out. Take your Dramamine. Uh, that would just, even in simulation, you know, but live money, it's I want to be in and out as quickly as I can. Now let's see here, that's, you know, if I get that after having those 3 scratches, and it's a Friday, I can say, you know, that's not bad. You know, and then you look back to this week, and you know, that's ending the week on a good note right there. You know, FOMC day, that was nuts. I didn't trade that. The day afterwards was also a little bit nuts, so I didn't want to get involved with that either. So really, it was just Monday, Tuesday, and Friday today where I did any trading. So I kept it to a minimal amount. I don't think it was really 22. Not sure how they're measuring this. I don't think it was. Okay, I guess it was that many trades. That's still not all that many. And look, 63.64% of the time. A lot of it's getting better at reading order flow, doing these recordings, and going back and watching them. I went back and watched some of them last weekend, and I'm going, okay, here's some things I can improve upon. But you know, going back to this, see, we have this liquidity fill. It's a high level of liquidity. It was sitting here for a while. I mean, see what it does here. So made a big move up after this this fill on this high liquidity, bid liquidity, and you're starting to see some of these buy absorptions. So there's a lot of activity right there. and then you have a lot of these bids executing. You have a lot of combination. You have a lot of sell side getting out, a lot of sellers getting out. You have buyers activating right there, and then you have a big move that rips up. And then here, you have a little bit of filling. See right there, there's another one. Look at that. See, that's ask liquidity. You have a bunch of buyers going into here. You have a bunch of sell activity firing off right in that little area. You see how it's filling right here. You have sell absorption. You have this liquidity's gone now that had been here for a while. See, this had been here for, is that 726 up until, oh, not that long actually, where it's real dense like that, but you go back further, it was here for most of the morning. On 70, that's right where that's on a higher time frame also. So you have a few more setups here. This had just now, after this fill, and after this stuff happened, this sets you up for a potential IBF. In this case, if you had gotten in right here or here, you would have scaled, would have come back, maybe, possibly taken your stop, maybe not, maybe it'd be up here or something, and it doesn't quite tag it. But then we come down, test, come here, this would be a great entry. This would be a great entry. And look, it's also a head and shoulders. And then it comes back to, you guessed it, the place where a bunch of retail stops are in. So liquidity fill. So you see this liquidity fill, liquidity fill, liquidity fill. See, it's not always 100%, because see here, they had to absorb a lot more. We had to go down into this stuff. So you have liquidity fills, liquidity's getting filled. Went up to here and had tested this structure. I think we might have had something news related here. Actually, I don't think we did. This was enough liquidity apparently to go up past here. We have stops on this side. So we have buy stops here. And then this thing just shoots to the downside. So this was not enough to continue to bring it back up. Then we have this fill right here. I already went through that trade. And this was a big one here. Look, 336. That's one of the biggest things that filled today. So I did leave quite a bit on the table here. But, at the end of the day, hey, that was not a bad trade at all. See, 'cause I'm starting to recognize these structures. I'm starting to recognize, where are these liquidity fills important. And now we can start to see absorption happening. Let me see if this is another example. Okay, yeah, see, we're starting to go into there. Yeah, see, it's going into here. It's picking them off a little. There's one, there's one. Where did it go up to? See, it got some of these. Looks like a little stop run sweep. into there, went up into here. Half a cell iceberg also. Went into here, it filled a little bit of that. And, you know, then it's back down south. And where does it go? It goes somewhere close to these. It was still a bit off. So if you were long and you had your stop under this stuff, I mean there's no telling, but the longer direction is going up still. You can see more absorption near liquidity, but it didn't quite fill in there. So this is a little more nebulous right here. Have some absorption. Well, that was a little bit off. It didn't quite fill all those. So let's see, it went in here. Yeah, it filled some of these. You know, and then here's towards the end of the day, you know, you got the last 10, 15 minutes, whatever. It's pretty nuts. I don't want anything to do with those last 10, 15 minutes, whatever, because it just gets all weird. See, stop divergence, goes back up, stop divergence, comes back down. End of day, so who knows what the hell, it gets kind of nutty. Look, and another absorption at a high level of liquidity, and kaboom. And there it goes towards the end. And it looks like no, it looks like these are sells because it's the end of the week, so a lot of people want to get out. Who wants to stay in the market over the weekend? I don't think I would. So that's just a lot of people exiting. And it seems like on a Friday you would be more likely to get that if it's been going short, because you have people wanting to get out. So see, I left quite a bit on the table. I identified using the order flow, liquidity, absorption, where a good entry was, but that was after these multiple scratches. So I executed these well, multiple scratches. Then I finally got mine that worked out. And if I had been able to foresee that it could go up to here, oh wow, that would have been excellent. That would be excellent. But it's, you know, these were more conservative, reasonable targets, and you can still walk away with a nice return for what that risk is. I, you know, I'm getting in. Was that 44.75? And you know, if I get out at 54.75, that's 10 points. If I get up maybe around here, 57, that's you know, it's 12, 13 points. That's excellent. Who could have seen this coming? That's further away than that's a little bit out of my league to be making a move like that. Because what's the probability that you're going to have a huge move? You got to shoot for reasonable targets where you know there's behavior at. So, and I mean, after this behavior right here, you know, it's VHVN, high liquidity, absorption, testing down here. That was a good entry, so I think I have some good notes doing this replay on what I was up to, so I have some other things I got to attend to, but I think this was a pretty good video. I learned quite a bit today. And have a good weekend, everybody. Looking forward to, getting back into it next week.